Welcome to the Crypto Day morning for today's date, which comes in that of Thursday, the 28th day of February, 2019. All bets, trades of the like, well, that's within each his own risk reward. Before getting into charts, it has been announced from Cryptopia on Twitter that they plan on opening the markets as early on in the next week is where they intend to do such. So very good progress on that situation as that account was hacked, or the site was hacked for several millions of dollars in the middle of January. And about a month and a half later, things seem to be progressing well. On to Bitcoin, looking at the Coinbase exchange on the 1 minute time frame with a whole bunch of candles, and this was up to about yesterday afternoon, a little after close to the U.S. market close time. And U.S. market is in their market. It just went down hard from 3,800 down to about 36 and a half, about 150 basis points or $150, 3% or so. How did this look on the 5 minute time frame? Well, it was one of those fast sell-offs on quick little volume here. It started to rally up from that point. As we can see, it went quickly below this 3,700 Fibonacci line and then quickly up thereafter. We'll take a look at the after part after scrolling through the longer term time frames for this moment. And via the 15, just straight down on the single hour. It really is a dwarf move when looking at what happened on February 23rd through 24th, the 4 hour time frame. Had that move, came back to where it came from, literally, and well, now is showing a decent pattern. This is an interesting situation. When looking at this, normally you think, okay, this is just one of those spots where some individual, and I mean one person, with a fat finger typo or just inexperience, with rich inexperience, decides, yeah, I'm just going to sell all this down at market price, like in one push, and then after that, it like never gets accepted and it just comes back to that area. No, because it happened over several minutes as we were seeing at the start of this. Now, originally, when I'm going to put the daily chart up, but originally when it made this move from this Fibonacci 41 level, it had a pierce above 36.75. Well, that all got fixed via yesterday's session. I mean, as if that really matters, but it now technically is a pierce below that 36. The 18 average, it's just round the closes, so it's in that spot where, okay, it's a Bulls versus Bears battle in the boxing ring or MMA octagon or whatever you want to talk about it as. And someone's going to win. And the battle will remain as long as it's in it. And the win is trying to escape it. It's almost like you go to a penitentiary. Whoever's able to escape the penitentiary, that's just one way of looking at it. And by doing such, you see, okay, getting out above the highs, the bulls will call it. Well, that's successfully coming down within this area after your price correction from a point A low to a point B high. It's your first deep correction. This was a small correction here, or a half-ass correction, whatever you want to name it. And then getting above. After that, you expect to have a big break above this and go to the next level. That's about 4,800. I would say piercing close to 5. Especially after this move now, breaking down below this, definitely holding it, but getting out, you would see the Bears winning, doing their escape. They're trying to run to 34.70 and even trying to get past that. And you can say that this was an escape attempt, but the prison guards, they didn't allow it too quickly. I mean, that's just another weird way of explaining it. But as it goes, it's been in a downtrend, obviously, for many months since the last leg lower, having the swoosh down into here, sideways range. It's got to break out of this range, which is between 33 and 31-ish area now. Either to the downside, that's like 1,000, 2,000-ish area long term, and then breaking out above this, well, it's a 48 and a half, but there's just so many levels after that that when we look at the multiple time frames with the daily time frame, it's in a, we could call it neutral, barely starting to go bullish. Definitely on the weekly time frame is where you're going to be getting more of the major bearish sentiment. I know there's a lot of lines in the way, but price action's in the 18 average. And then on the monthly chart, it's a very strong bull market attempting to revert the trend because it's already been going through this long, long, long correction. It started it February of last year. It's February of this year today. And tomorrow will be March of this year. So it's a decent size, but it hasn't had any major decline enough to inadequate a downtrend, which is lower lows, lower highs, and a declining 18 average. It's barely been declining, thus attempting to revert the trend. When it attempted to revert the trend here from this move, it didn't do it. It tried. It failed. And now you see how it tried to revert the bull market here. It tried, and it succeeded for that run because it got above this level of resistance and it made a good leg higher. And back to the short term, looking at where we are today. So after that move, the UV-shaped formation, getting above this hourly time frame. I like how it's how we have support here, breaking out above just a decently small but noticeably higher high to this point. And now back to this thing here, we're supporting what's a little more of a higher rate of ascent, 18 average. This thing hasn't really been below it since it got into it. It's a nice little remarkable pattern in that. It's got some established resistance in here at about 38.18. That's what it broke out last time. That's what it's trying to hold. And then some of the other ones, well, after that, it's in here, the 38.59 mark. And of course, that would fill a lot of that empty space when we're talking about from this decline. Let's take a quick look at Theta. And it's in day number 2 of retracing 100%-ish back to its previous high. And it's had long sideways runs supporting this level that was showing a lot of good strength, and sure enough, it did what it did. And before this happened, when you look at the market, we've had, if you just draw a line that connects the lows and the support, you get this up-shaped formation, and then it just starts to curve down, or you start to, either way you look at it, a beautiful up move, which had its first price correction here, but it's held that low, thus so easy to keep uptrend lines in place. Resistance, well, this high was barely higher than that one, but it was practically the same. And then you had the lower one, so you had the symmetricalness move out. But until you get a break of one side or another, the market's just going to end up doing what it's going to do. And if you're able to catch the breaks either side early enough, then in theory, there's tremendous gains, and in this case, it was the case, as in theory, it would have been right there at 28.97, as it was clearly above it, and your risk of going long is a failed breakout. That it goes up there and it just goes up a little bit and then a really crash fast move over. but you realize on the situation of breaking above resistance, then it's probably going to make a move to previous high. Where do you put your stops and all that, yada yada, if you're playing in that type of measure? Well, risk reward, I mean, it could be very risky going down here. Is it worth the trade? But throwing that part aside, if you're like, yeah, I'm going to go long here because it broke that resistance, and let's just assume that maybe you're able to short or you already own some, and maybe you're looking to sell or sell short if it goes to 31.23. So you're doing either way, and then, okay, I guess it went up, I'm going to go long, and then there you go, now you sell a couple days later. So the theory on it is as well that if you're playing for a break of a key resistance or support on any market, and there's a good distance to next key level, if there's still a good distance from the clear break, and in this case 28.56 would be that oftentimes your trade is going to end very quickly. So then if you were to say break bet at 21.32, that it's going to go below 17.69, and when it happens, if you're right, it's probably going to take somewhere between, even, I was going to say 6 to whatever hours, but it could happen in like half hour. But it would probably happen in a day, two-ish, like a very quick period of time, and in this case, sure enough, in this spot here. As far as the market conditions are concerned, I was thinking when it first got there, and I posted a video upon such, that the move to 3600 was lacking a lot of volume. As we can see here with the volume breaking here on 2300, how decent it is. And then we have this volume here, we have this volume here, we have this volume here. And then it gets up to 36 right here. If it's going to top, why do we not have an influx coming in? Why do we not have a big period up in top there? And then it gets to this high, and now it pierces above this high in the previous one, but it still has a long ways to go to have a clear break. In fact, it still technically is below the all-time highs against, the opening on this highs. It's around 4,000 even. This didn't get to 39. Again, though, lacking the big volume, and continuously volume remains constant. It's just there. Very much expected low volume you would expect after into a middle of a run or on a post move, meaning you have a big move like this here. This is the post move volume here where it's big, but it's much lower than before. That's the type of volume I would expect if it's not over yet. I still realize there could be a spot where this thing could have some sort of big move. Maybe it comes up to 3,800, and the volume is up to like maybe double or triple this or something, and then it comes down. That would be like, okay, well, there's that big volume, because I would expect when looking at this on the daily term time frame that when we end up seeing this high wherever it happens to be, that it's going to come with large volume. And right now, when we have this volume here, it's hard for me to point out that this would count as that. I would expect there to be a day that is well noticeable than what this volume number happens to be. I mean, that might not be the case. Saying everything of that nature, if resistance doesn't occur where you're supposed to get it, expect a fast move to the next level. Conservatively, I think that's between 5 and 6. And ideally, I think that would be closer to 10,000. You have to give it many a days to say, oh, is this an area of resistance or not? If we have like 3 pause days or 4 pause days, and right now that's what it is. A pause day to me is after a good move, either up or down, it just stays down or up near to where it was. In this case, up. And it just hangs in on that area. It doesn't go down much, barely breaks previous highs, has lower volatility usually on the move before. And today's volatility would be okay, but still, yeah, it's one of those pause moves. So I don't know yet the level of resistance, and resistance means stop going higher, the uptrend to finish. And if it does this for like 3, 4, 5, 6 days, then that would count as resistance. There is obviously no price correction yet for within such. You could get a little bit of very short-term support at 3,000. Longer term, short term, whatever. Or then ideally between this 25, 23, that's like more of an intermediate term. And then long term would be anything at like even down to here or lower. But it's only been, when we look at this on a single hour time frame, with 24 hours in one day, what about 15 or 16 hours since that all-time high? Well, that's a lot of time to go on this. Within such, maybe we're making a head and shoulders pattern on the hourly because we've had this long up run. The last all time, the last year to date high, or yeah, last year to date high. That's technically correct. It has a matching low, thus it didn't make the trend of finding support at the 18 lows as it broke down below it at this 2-hour session. Because of that big move, that was enough to make the 18 start to decline. Thus, now we're in stage 3 of reversal of trend, which is correctionary move back to its band. Another one of those little battles between bulls versus bears, breaking out of the 18 average of highs, is showing the possibility for resumption of trend with a little bit better of a correction compared to this one and this one, a little deeper, a little longer, and all that type of stuff. But breaking down below here, with the 18 barely starting to decline, will help decline that. And then breaking down below this support, which would be the neckline of the head and shoulders pattern, then that would be stage 4 for reversal of trend amongst this 1-hour time frame. And then when that's the case, I'm looking for Fibonacci. I'm looking for where does it look in previous levels for where it came from. Fibonacci would be taken, say, this low about 22 and 3/4 to this high at around 39. And then I'm looking for 61.8, 38.2%. Where it came from, where am I looking at by this? Well, there's not much breaking down below this level of support. You had this little small congestion area for 2 or 3 hours, but it was really small. 3,033, and the 3,000 psychological number. That's just, yeah, to me, there's not much support breaking down between 34 and 3,000, that range there. So I wouldn't be surprised if it did break there to have a fast move to 3. And as far as breaking out, using the exact same time frame analysis, how would the single hour look? Well, it can be wild. You're talking about chartering new territories. You're talking about trying to enter a hog wild try to market status, which is pretty fun and pretty cool on the upside. Thank you for tuning in and have yourself a great day. Bye-bye.